Good morning. Yeah! Yeah, boy! Alrighty. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, it's time to do some trading. Yes! Yeah! It's Wednesday, it's hump day, it's the middle of the week. Hey, there's not a lot of news on the calendar to get in our way. So maybe we just have that opportunity to get into the type of trends we want to get into. Very cool. So with that in mind, I asked you, are you risk on, or are you risk off, are you risk neutral? Please fill out the form so we can get a sense of the community. This is, we're a small aggregate, but from that we might discern how the overall trading world feels. So please post that. And by the way, it's completely anonymous. We're not tracking if you're right or wrong. I just want to know how you want to set up your trades today. So I recommend we go over things like gold, oil, Bitcoin, and treasury yields, and dollars and yens, and, well, anything really that you want. So please let me know how it can help. I am a humble servant. I am here to serve. And by the way, the squeaky wheel often gets the grease. So I'll start here today with the QB. This is Quant Box. You can find it at quantbox.co. This is our dashboard and just gives you a little heads up right before the market opens. Yields are still below 4.5. Okay. Oil is down for the day, but you may have noticed technical places. Ooh, it fell. Yeah, it fell. Is it going to continue to fall? Did you look at the chart? Did you look at your pivots? Wink, wink, nudge, nudge. What about gold? Gold is neutral. S&P 500 is flat after about 3-4 days in a row of some up. Euro dollar, 107.5. Bitcoin down, following that down channel that we identified yesterday. And ever so slowly, maybe we move into some risk on. Here's the assets we're interested in. Here's the assets we're not interested. Yep, cool. And of course, what we do to get that daily mix bias or risk bias, what we're looking at, and in this case, I'll do the medium term. What we're looking at is over the last 7 days, what has the yen done? Is that good or bad? What has gold done? Is that good or bad? What has the stock market done? Is that good or bad? What has the dollar done? Is that good or bad? Okay. What about yields? Is that good or is that bad? What about volatility, but specifically options trading on the S&P 500? Well, does that point to goodness or badness? And then you look at that, and of course you have to understand, is it good or bad? And is it, how do these things correlate? And nonetheless, QuantBox very easily tells you, maybe we're interested in buying the S&P 500, gold, New Zealand dollar, Canadian dollar, euro, Aussie, and are we interested in selling Swiss franc, Japanese yen, and dollar? Well, it's only ever so slightly risk on. 2 shakes of a lamb's tail from going to mixed. And we were risk off, and then now we're maybe moving towards risk on, or maybe it's moving back around. The thing is, you should look at this, and a subscriber to QuantBox in less than 5 seconds can see you should be cautious today that we may be lacking an underlying intrinsic trend. Cool. From there, you might want to look at TRADARS. Okay, TRADARS. Now you can use this in conjunction with QuantBox and say, hey, can you tell me when technical trades, in particular, not just ideas, but actual patterns are forming? Can you tell me? So 15 minutes ago on a 30-minute chart, TRADARS has noticed movement in the pound dollar, and also on the hourly. Then you say, and then right an hour ago, TRADARS noticed something happening on USD Mexican peso. Okay, both on the 15-minute chart and the hourly chart. So what ends up happening is you're like, dude, is the dollar strong today? Yeah, maybe. Lots of things going on here on the peso this morning. Holy smokes. Did you know? Did you see it? Well, the problem is if you didn't see it, it's because you're probably watching 5 charts, 10 charts, 20 charts. TRADARS is watching 7,500 charts in real time. And it's precision as far as technical analysis is remarkable. I mean, remarkable. It doesn't guess. So anyways, nothing really on the calendar until tomorrow's Bank of England decision. So do you know what's going to happen? Well, nobody knows what's going to happen. But if it comes out where they don't change interest rates, and by the way, you can see TRADARS doesn't expect an interest rate hike or a cut. So we've already cut through all that nonsense. And then it's telling you, well, what has happened to these dollar pairs based on past Bank of England decisions when they don't raise or cut? Wait, what? Yeah, it goes into the past. That's why it's called a sonar, to identify what happened at BOE meetings when they paused. So you would suspect pound dollar is the best thing to trade, and that might be. But notice there's no scalp. There's a day trade and a swing trade with 70 to 80% accuracy, but no scalp. The only scalp that's present, well, there's two. USD yen, USD Swiss franc. Oh, sorry, USD CAD. Oh, and I guess euro dollar. Sorry, there's a few scalps. But notice the level of complexity. On euro dollar on the past, 80% in the past, when the Bank of England paused, it would go up for 2 hours, but down for 2 days. What? Well, that's good to know. Okay. Same thing with USD yen. 80% of the time in the past, when the Bank of England paused, there was a sell for 2 hours, but a buy 2 days later. So it was down after 2 hours, but then up after 2 days. So what does it tell you when you start looking at stuff like this? Dollar tends to weaken, or at least when you look at euro dollar and USD yen, which are very liquid pairs, dollar tends to weaken, even though it has nothing to do with the Bank of England. Well, whatever, that's what's happened in the past. Okay, it weakens for 2 hours, and then it strengthens again. USD yen, USD weakens for 2 hours and then strengthens 2 days later. Huh! Is that good to know? Dollar weakens 2 hours after the BOE decision, but strengthens. So look at, there's congruency. Oh my goodness. Oh my goodness, huh? Okay. Burn says, what's sonars is the wrong term for something that looks back. Sonar is used for what looks in front of you or around you. Well, and I don't even mean back. I mean below is what I mean. I look back into the past, below. I'm saying below. But yeah, the term, I don't know. I mean, obviously I'm playing with the idea of radar and sonar, right? So one sonar is looking in front of you and the other one is looking below you, right? With the assumption of a destroyer looking for a submarine below the surface. So this is like below the surface. So like, for example, how does it get there? And so it can create the technical trade plan. Boom. Okay. Oh, and while it's thinking, the other thing I want to show you is there was a bug. All these time frames were off by 1 hour. We finally found the bug in a module somewhere, blah, 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 but it is fixed. So Canadian unemployment rate tomorrow at 8:30 a.m., that is the correct time. You want to see something baller? Okay. Yeah. So on Friday, you want to trade the Canadian unemployment rate? Set up a reminder and put it on your calendar. Shut the back door. So it opens up my calendar. Canada unemployment rate decision. Cool. Do you want an email 10 minutes before? Do you want a notification? Email me 1 hour before, bro. And then notify me 10 minutes before. And then you can go even further and you can say, okay, Canadian jobs report. And let's say it's less than expected. Okay. And you can say if less than expected, or they're all down. You notice this? Okay, see, isn't that useful information? No matter what happens, it looks like in the past, okay, So then you can go here, and then you can pop it into the reminder, and we'll call this down, down, and down. Okay, cool. And then I can save that. Now I'll be reminded and updated. Oh my gosh! I mean, seriously, that is cool, isn't it? So I think jobs will be less. Oh, wait, unemployment rate. Unemployment rate. So I'm going to go up. So I think the unemployment rate will jump up even more than expected. And then I can ask it to prove it to me. Okay, that's how it got there. So anyways, that's really neat, right? Okay, cool. Now, if you're going to use TRADARS, and if you're going to use Quant box, so you can get better results more quickly, meaning taking the guesswork out of your trading. You can take the guesswork out of your trading because you have a good staff, you have a good team. Okay, you're probably going to do better. You also need a good broker to execute your trades. And you're going to need, in my humble opinion, you're going to need an ECN. Okay, Trader's Way is an ECN. That's a unique business model. And so you're going to need a good technical analyst, you're going to need a good fundamental analyst, and you're going to need a good service provider to execute your trades, correct? Do you think if you were starting a hedge fund that you would need that? A good technical analyst, a good fundamental analyst, and a good trade execute, a good trade. You need good trade execution, right? Yeah. So that's it. You got the dream team here. Okay, you got the dream team. Oops. Oops. Where did my platform go? Let me reboot it. Okay. All right, so let's see. By the way, just out of curiosity, do you follow the vision that even though you're just a retail Forex trader, that you should have the same type of foundation as a hedge fund with big money? That you should have good tools in a decision-making process for investing and pulling the trigger? Do you guys buy into that basic idea that you should have the infrastructure of $1 billion hedge fund, even though you're just, quote unquote, air quotes, just a retail Forex trader? How many people say yes to that? I don't like the idea of you're retail, so you're dumb money. I really take offense when people say that. There's smart money and then there's dumb money. Well, I suppose if you don't create a true business foundation, well, maybe it's true. But you don't have to be dumb money. Let me end the poll. Yeah? Let me check something for a second here. Hang on, hang on. Oh, no, all right. I'm testing new internet. Hang on. Well, the first thing burned is fire mom and dad. Mom, Dad, you're fired. Yeah. Well, there's a geeky, nerdy YouTuber that has a big following, and he's been doing YouTube videos for, I don't know, 10 years. He's got millions of followers. Everybody likes him because he's nerdy and he's quirky, and that's kind of his thing, right? But then he started a new YouTube channel with his wife, and she is smoking hot. And people hate it. People hate it. He gets nothing but bad reviews because she's too good looking for him. And it takes away the nerdiness and the quirkiness. And they're like, there's no way that his wife loves him. And you're like, why? Because he's geeky and nerdy. Everyone's like, no, it's because he's rich and famous now on YouTube. So anyways, whatever. Everybody's got to hate. Right? Haters got to hate. So anyways, maybe if you become a YouTube influencer, Bernd, right, you will be taller and more handsome. Let's take a look around the world. Oh, I guess we're already on this. All right, so let's go to the Bitcoin. Bitcoin, we have channeling down. We talked about this yesterday and before. And looks like it's kicking off the 21 as bearish. But there is a little bit of hope. There's a little bit of hope. It looks like to me, unless it's just random dumb coincidence. Let's do this in black. It's just easier to see. We paid attention to this annual pivot, and then we did it again. Okay. And here we are. But also this other annual pivot. Notice that. So there's ever so slight hope for bulls here, ever so, that it does one of these. It might, it may, it could. Doesn't mean it will. But it's something to eyeball if you're a bull. Okay? Bears, you're 2 or 3 days late. I don't know what's going on. Well, those types of things, well, obviously I don't watch them or pay attention to them, but just the idea of like, it sounds like they're preying on poor people. Oh, let me give you the light into a better future. I'm just trying to teach you how to trade. Right, that's all. All right. So there's some down on that, especially if there's some risk off going on. Anything else? Well, here on the open, Sunday wants to know, what is the period for the 3 moving averages? Okay, well, first of all, I can tell you. Second of all, you could read my book I wrote 20 years ago, and it's the same info. The third thing I'd like to point out, Sunday, because it's a decent question. If $88 is not too much money, you should take my training course. I know it sounds like a pitch, and I guess it kind of is. But I can answer your question with a 100-hour response. Okay? And one of the reasons I pull this up is like, honestly, the period of the moving averages is irrelevant unless you understand what they represent. So you have to understand my process. For example, I separate price from market. You have to understand what these moving averages are doing. Because I noticed in my early days of trading was that there were times when price was falling, but the market was bullish. And I realized that that was important because when the price went from bearish to bullish and lined up with the market, I tend to do better. I know it's not like a revolutionary thought, but back then I had to figure that out. And then I said, well, how do I identify price and separate it from market? So I knew when to stay with the trend, but take profit and then re-enter the trend. And so I have training courses on that, and there's a lot of different things, swing trading versus day trading, all these different things. But it was also the basis of my book. So I would say, honestly, it doesn't matter what they are. I don't have some magic formula Sunday. Okay? I don't. But you can use any two short-term periods that you like and two medium or longer-term periods. The shorter ones represent price action specifically. And the longer ones represent market or even bias if you don't understand fundamentals. And so it doesn't matter. So if we go back to that Bitcoin, I guess I got to go here. Okay, so if I look at Bitcoin, and let's set this up, let's clean this up. Let's clean. So template. Do we want to do daily confluence? I guess we'll use daily, and I'll get rid of the annual pivot points. Okay, so now we're on shorter term. Okay, we have a 5 EMA and an 8 SMA. Okay. And the other one is a 21 and a 55. And I look at the angle and separation of these things. So the next tool I used in my again, I taught myself how to trade, right? So I got all that squared away. And I tend to do buy dips in an uptrend. Sounds great. But then how do you analyze if the uptrend is changing? And I realized the angle and the separation mattered. So I asked myself, what could I use to measure the distance, the separation between the 21 and 55 EMAs? What could I use to measure that? Any ideas, Sunday? So I can more easily see this distance. Because I might still be a bull. The 21 is above the 55. Okay? But I could be less and less bullish. And at some point being prepared to be a bear. Is there a tool that I could use to help? The moving average convergence, and that means they're getting closer together, divergence, which means they're moving apart. So I started to use MACD. So if I go to my original template that I use over and over and over and over and over and over again in my book, in the examples, I can go to like this. And what does this tell me? There's two things going on. The market, okay, the market. So this MACD is only looking at the market. The market is bullish, but just barely. And, okay, so because we're above this line here, the water line, that means the 21 is above the 55. I don't even need to see it. The second thing is, because it crossed down and is falling, the 21.55 moving averages are converging. So I'm bullish. The direction of this shows me I'm less and less bullish. And then, in fact, we're almost to the point of neutrality. So does the MACD matter? Well, the thing is, most people have MACD set incorrectly. They use the standard out-of-the-box settings, which to me are just frankly stupid. I don't know what idiot uses those settings. Well, probably somebody that doesn't understand the math of MACD. So I only used MACD because, before using MACD, I studied all the different indicators that I had heard of. And I studied them, and I found them to be very inconsistent. My quantitative analysis of most, if not all, indicators is that they were helpful some of the time, but not helpful other times, and I couldn't discern when. Well, if you can't discern when, you don't know when to trade against them or trade with them, so they're statistically useless. But then, having got to the conclusion of, I want to know when the 21 and 55 are moving closer or further away from each other. And to get that data, I would have to change the settings of MACD. And now I'm using it for a very specific purpose, and I'm measuring the strength of the market. Does it matter that it's 21.55? No. So before 21.55, I used 20.60, and it didn't make a dang difference. Could you use 18.34? Yeah, probably. Could you use 25.50? Yeah, probably. I don't care. Don't care. It's irrelevant. So the period is irrelevant. Okay? Right? It's not the magic of the wand. It's the brilliance of the wizard. So you're using the tool to give you information. You're not trading MACD. I'm not trading the moving averages. You can adjust them and it wouldn't make much difference. Okay, so we can make this a 25 and we can make this a 50. Okay, doesn't matter to me. I would have to change my MACD settings, but does that matter to me? I don't really care. Okay? We know the vulnerability that is occurring in the market. I've analyzed this 15 different ways, right? But that is not bullish. Now, technically, there is some bullishness, and it became more and more and more and more bullish until about here. Okay? 2050? Yeah, see, I tell you, it doesn't matter. do whatever you want. Just make sure they're medium-term moving averages. Doesn't matter to me. And you would never just trade these things. What matters to me is at this point in time, I need to change my attitude towards being a bull. It helped me see the potential of no more higher highs. And now we have a trap and break, which I teach all the time. This is something we cover all the time. Lower low, lower high, lower low, okay, lower high. Next outcome is a lower low. You'd also get a 21.55 break, and it would then be technically bearish on this time frame. Okay, so if you're a bear, that's real. Now, on the flip side, you can say, well, that's happening, but on the long run, Bitcoin is going to $100,000. Okay, great. This would not be the time to buy it. Now, if we get ourselves in a new trap and break scenario, okay, and you use technical analysis now to measure all of this, even using your 2050, I mean, again, I don't care. The next thing is, what if it does this? Ooh, well, this is going to do one of these. Okay. And this will, okay, do one of these. Now I'm game on again. And the MACD will stay above the waterline and turn up. And I'm game on again. So what I talk about in my book, okay, because I separate price and market, we know the price turned bullish here. But, you know, the mark, right, this is reconfirmed here. Meaning, okay, the 21.55 crossed up here, and it went up, and then price lost momentum and then regained it. And I found, in my humble experience, that I did pretty well. It's things started to connect for me when I started separating price from market. Okay, and I started, okay, not just trading, let's say, the moving averages, because sometimes this crossed up, sometimes it didn't, and very often I got late, but I tended to do really well in here. And MACD up in this point basically said take profit when you can. Do you understand that point? I don't care about the moving averages. Up here, it said now's probably a good time to take profit. And at some point, and it might happen now, and it might happen down here, way down at 50. This could drop another $10,000. So you might have one of these scenarios. Or maybe it happens now, if you're a bull. So now I got a plan A and a plan B, and now I sit and I wait. All of that thought process, Sunday, is what will make you a successful trader. The moving average periods is a good question because you need to understand what my charts, and I, again, take the training course because obviously I give you all of this, but to me, as a trader that's been doing it for 20-something years, that's not going to make a massive difference. You can tweak these numbers. I can still make money. So it's not the numbers. It's not the wand. It's the wizard. Do you understand? I want you to know how to read the market. And you can interpret this and change the moving averages to suit your preference. You might be more aggressive than me. You might be less aggressive than me. And you might play with your numbers, meaning the moving averages, because I tried all kinds of things. And I found the ones that tended to suit me, my level of aggression and all that kind of stuff. It could be totally different from you, and we can both be successful. But if you don't know how to read the market and separate market from price, then you don't know a lot. You just don't know when to buy or sell. And of course, that's where the money is made. Right? So the price is falling. Okay, but if I was a bull, I'd be interested here and I'd be interested in here. And now I wait. That has nothing to do with the moving averages. But if I get these setups, the moving averages will confirm my hypotheses. And so I'm in front of the moving averages. These moving averages lag. But look at the heads up that MACD gave me to say, hey, bro, price is rising, but MACD is falling. What do we call that? Divergence. Now, some guru on YouTube would tell you that means sell. And I would tell you, no, it doesn't. It means take profit. Because I don't sell against the market. Why? Survival. Survival skills, survival instinct. So I'd rather sit and wait. But it tells me the bullishness we had in Bitcoin is ending, and I'm better off putting some money in my pocket and walking away. It doesn't mean sell into a bullish market, because there was still a very good chance over time we got one of these. So I'm not going to sell Bitcoin. Are you nuts? I could now. Why? Well, because we have a lower low, which means I have permission to sell a lower high after a triple top. Yeah, I could do that. And then I made a lower low. Great. Could I sell here? Yeah, I could. Great. I could do it. Has nothing to do with moving averages. But me personally, Wayne McDonald, I think I'll wait. I think I will wait. What do you stink? Smell like a plan? Well, Sunday could come in and say, no. Well, Sunday could say, well, I don't trade the daily, Wayne. I only trade the 1 hour. Okay, you'll probably try to take this down. But if you back yourself on the daily, just be prepared that there's bulls there. There's bulls there, and if we get a higher high, there will be bulls here. You should know that, even if you're a bear. You see, Sunday? Oh, my pleasure, Sunday. My pleasure. Okay? I know you asked a pretty benign question, and I gave you a hardcore answer, but yeah, I need to hit that hard and make my point clear so that you can be prepared. So it's falling, and it might fall, but I know where the bulls are. And my thought process is, since I'm a bull too, now things might change, but if I'm a bull now, I will set up an ambush here, and I will set up an ambush here, and I'm anticipating. That's the difference between, I think, an institutional and a retail trader. There are many, but one of them is I'm setting up ambush based on my perspective for the future. I'm ahead of the market. I'll accumulate on the way down in certain market conditions. Okay? The distinction I made at the Quant Box video today is an institutional investor will buy on the way down because it's cheap. But obviously they're buyers because they believe in the future it'll be more expensive. So an institutional investor will accumulate assets as the price is falling or after the price has fallen. A retail trader sells because it's falling and then buys because it's rising. But that sounds logical, but they never know the top and the bottom. So they keep buying after it's fallen, and then they sell because it's falling, and then they keep selling after it's rising. And so you get one of these things where there's a little bit of profit in the middle, a lot of losses at the top, a lot of losses at the bottom. And what you find is if you're really good, but you trade that way, if you're really good, you're never profitable. You're break even. At the end of a year, you have 5,000 trades and you never made any money. If you're really good, you end up being break even. And if you're not good, well, you end up losing money. Okay? And those types of traders are usually very rules-based, where they use the moving averages to make decisions. But by design, they're lagging. You'll always be late. And a better use of the tools are like a top has formed. And we knew that in advance. And if you wanted to be a bear, you could have. Okay? And then when you saw this, if you were a bear and you saw this and you didn't trade it, you're not a bear. You're a lurker, an observer. Okay? Okay? Cool. Cool. Neat. Was that helpful? Would you click the thumbs up button if you thought that was helpful? I try to make a difference. I could have just answered the question and moved on, but I am trying to make a difference. Cool. So I have a little scalp going on in oil. I think I'll move my stop a little closer. Okay. Can you figure out what I did? Okay. Higher high. What used to be resistance is now support. My strategy was to buy. My tactics was to buy on the roll reversal. My stop was below here or below here. I don't remember. And now my goal is to try to let it run today north. Okay. Will it work? Oh, I don't know. But we just talked about ambushing. I've wanted to do this trade since about here, but I understood the threat. So again, it's having good tools and knowing how to use them. Okay? I knew at the time this is where bears live. Okay. Now, so I had to wait day after day. I had to wait 1, 2, 3, 4, 5, 6, almost 7 days. But at that time, okay, I knew a couple of things. This is where bulls would live. And I also know this is where bears will exit. Oops. Bears exit. So my strategy at the time, okay, was to buy where the bulls are, because I'm a bull. I use scientific methodology to confirm my hypotheses of buy with the bulls. I need the market, and now again, here's the 2155 that we just talked about. Okay, here's the 2155. Bearish and aggressive. And what I needed was, right, was these moving averages to roll over. And if so, then I could always buy something like this. But they didn't. Okay? So now we have this. And I know this is my threat. I'm about to be attacked. See? Unless I just lost a bunch of bears. There's nobody to attack. They've left the battlefield. Maybe. Okay, and so I zoom in, and how do I know that? That's, okay, that's what this moving average represents. And that's why I've moved my stop a little closer. If they are going to fight me, they're going to fight me here. That's what I would do if I was me. So I'm going a little art of war on this one. If they're there, I probably won't lose money, or I won't lose a lot of money. Okay? And if I'm right, I am going to get paid. Okay? I could take it a little further and say, okay, I'm a bull. I want a plan for the day. Okay? I'm a bull, and I want a plan for the day. So I'm long on tomorrow's buy zone. Oh my gosh. I know, right? I'm long tomorrow. Okay? I'm long tomorrow. I'm long tomorrow today. What does that mean? It means in Asia yesterday, this was the sell zone. And it fell today. That was today. Today is done. You're on Wednesday? Oh my God, talking about lagging because some right, dude or dudette, okay, a London chica already took this down. They're washing their hands for dinner. That's why you can't show up in New York and you're like, what's going on today? Oh, I'm about to take profit on the work I did yesterday. That's what the answer is. So, well, then what's today? Well, today is tomorrow. And tomorrow we're going up to 79, maybe 79 and a half. Okay? Cool. Cool. Okay, I'm about to make $2. It's not a big deal, but that's equivalent to 200 pips on the euro dollar. Is the euro dollar going to go up 200 pips between today and tomorrow? No. The average daily range is not even close to that. Sky Killer says, Coach, would you say a $15,000 portfolio is worth to join the CIA or not? Yes, it is. Is it a lot? No. The second thing is, are you going to be an investor for decades? Is one. A second one would be, are you willing to reinvest all the income? One of the problems with my portfolio is that it earns a lot of income. Okay? So like if you followed along, you're going to make $1,500 profit in the next 12 months. Okay. And that has nothing to do with the value of the stock going up and down. If the stock market falls, you're still going to make $1,500 cash. So if you're going to turn that account into some bigger money, you need to reinvest that cash flow and buy more assets. So if the stock market's down 10%, you're going to buy more. Okay? Now, the other thing that, a quality, if you will, of this type of trading is that you have to pay taxes on the income. So my account, which is real money, we started with 50. I think we're at 65,000 now. It's my pension fund, and it's a tax deferred account. So if I sell some stock because I think it's profitable and I want to rebalance and take it out so it's performed well for the next 9 months, but I don't think it's going to perform well for the next 9 months, I can then take profit on that, move that, and buy some more less volatile stock as a way to hedge that risk. And, there's no tax event for me. The other thing is because it keeps earning money in the form of income, well, normally you would have to pay income taxes on the income. But I don't pay income taxes on the income because it's a tax-deferred pension fund. It's truly like the endowments I manage, okay? Like it's different. So you can't just have a regular account. But would you like to know how I do this? So like the answer to your question is yes, probably. There are some considerations you'll need, Sky Killer. And I'm not your tax attorney or accountant or anything, but I can teach you how to construct a portfolio with very advanced techniques. Yes. And more advanced than the average wealth manager? Yeah. Yep. Okay. Okay, so imagine now, Sky Killer, you're compounding. So so the income is 10%, and I am earning that. 9.89% is what is estimated by my Wall Street firm. It's not even me guessing. Okay, and so imagine you were able to do that, and on bad years, the stock market's down 10%, but you used the 10% you made, which is your hedge, so you actually haven't lost any money, but then you buy more. So now you own 10% more shares than you did before, and you got a cheaper price. And then the next year, the stock market is up 10%, so now you're kind of back to break even on the first year, but you added 10% more in the second year, and now your third year, you're back to break even, but you're buying 10% more. But your 10% more is 20% more than before because you're accumulating more and more shares, which means your income goes up. And so you have this idea, like you're compounding so incredibly quickly relative to a normal stock portfolio that is based on buying and holding. So if you do a comparative, someone builds a portfolio and they buy some Apple stock and they buy some Tesla stock and they buy some Nvidia stock, and that's that. And they go up and the value of your portfolio goes up. But not the number of shares. So your portfolio doubles, but you own the same amount of shares. You didn't get any bigger. And we all know the psychology. You own Apple shares, or let's say Tesla. You own Tesla shares. You paid $50 for it. Then it goes to $100. You're like, oh my God. And then it drops to $80. You don't get out. Then it drops to $75. You don't get out. It drops to $60. You don't get out. And then, that kind of stuff. And what happens is you just own the amount of shares, and the street value of these shares go up and down but it doesn't, it's not real because you never sell. But even if you had to sell, like now you're retired and you turned a $50,000 account into a $100,000 account, now you need to live on the money. So what do you have to do? Start selling the shares, which means every month you become less and less wealthy. You're literally eating the golden goose. The way that I'm teaching is you get more and more shares with less and less volatility. So over the years, you don't end up just owning the same 100 shares of Tesla. You end up owning, let's say in 10 years, you own 200 shares. And in 20 years, you own 400 shares. Okay, that kind of thing. And you're actually getting bigger. And now imagine these shares are also paying you income. What happens is, well, each share is paying you a dividend per share, but you own, after, let's say, 20 years, you own 400% more shares. So your income level is going up because, well, for those 20 years, as your income level went up, you ended up buying more and more shares and dollar cost averaging your whole position. But here's the big thing. When you're too old and you need to live on the portfolio, you've gotten it up to the point where the dividends that you collect, you no longer reinvest, but the income, that dollar average coming in every month, and my portfolio pays every month, not every quarter, not twice a year, not once a year, every month. And what you want to do, or at least my intention, is I can get that income level to the point where I can live on it or use it to live, right? And in my calculation, it will probably pay me $25,000 a month. Okay? By then I should be able to live on something like that. I won't have kids and university and car, I don't have car payments, but a mortgage, or I just won't have any expenses. So you're like, okay, I could probably live on that, right? But here's the thing. I could eat the $25,000 a month every month for decades and never touch the portfolio, never touch the money. I'll still have the stock portfolio. I'll still have millions of dollars in my pension fund, and I'm living on $25,000 a month, and I never sell my stock portfolio. Holy crap. Where what typically happens to an American is they retire and they slowly start selling their shares, and when they die broke. When I die, I'll still have the millions of dollars in this pension fund. I'll die so I don't need 25 grand a month. I can set up a trust to donate the $25,000 a month to charity like Rockefeller. Okay? And 100 years after I'm dead, I'm still reinvesting into society to make the world a better place. And that's why I love money. So, answering the question, Sky Killer, you need to join like now. The website sucks and all that. I apologize, but it sucks. But we've had a meeting. The recording is up there. We just had a recent meeting on the performance and all that kind of stuff. The next meeting coming up, the following meeting is a big meeting. This is where we wear suits and ties and we get together and we invest money. We'll buy some stock. Okay? So, Sky Killer, join. And the reason I say now, not like, well, we'll meet in a few weeks, you should join. You have a lot of homework you need to do before the first meeting. A lot. Okay? I have to teach you so that, like, for example, there's an 8-hour meeting where I give everybody a very, very detailed overview of the assets in the portfolio. And then we discuss them and debate them in great detail. But you also have a stock trading course. So I'm thinking you probably have pretty close to 24 hours of videos you need to watch before the next meeting. Otherwise, you'll come in, with one finger in your ear, kind of scratching around. You're like, what are you guys talking about? How does this work? How do you do that? No. So you have 24 hours of work to do. So I would suggest not cramming it in a day or two before the meeting. Okay? Yeah. Cool. Okay, good. Well, that saves you a lot of time. Cool. So I hope you get going. The last guy I interviewed for a position, I'm not going to let him join. Ha 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 ha. So anyway, Sky Killer, you can have his seat. All right, so that's that. Metals. We have a question about metals. Okay, we'll start with Gilly Gold. Okay, let's remove this. Okay. Do you remember my trade plan on this? Okay, my trade plan is long. It's no longer here, but we reviewed this for days and days and days. Like, this is what I'm talking about. Setting your trades up in advance, 2 weeks in advance. Because you have to know your line in the sand. You have to understand, right? You have to stand for something or fall for anything, right? Or you'll fall for anything. You'll chase your tail around like a dirty dog in the alley. So I've done my research technically and fundamentally, and I've made a hypothesis. I allow myself to buy gold. Okay, great. The next thing is at what time and at what price. I've identified a price that I am interested in. And it just so happens to be this price. Okay, great. So what time? When do I buy? Shh. Well, now I have to wait. That's all. So if I consider this a higher high, am I allowed to buy a higher low? Yes or no? Please answer the question. If I'm already a bull and I've already found my price and we've already respected the price and then it's made a higher high, am I allowed to buy a higher low? Yes or no? Okay. This is a swing trade, by the way. Okay, that's a swing. That has nothing to do with anything that I just said because it only predicts the higher high. Okay? So you could have been a swing trader and traded it off the bottom. Well, we cover that in the swing trading group. If you don't know how to swing trade, well, why haven't you joined Investor Bootcamp's swing trading group? Swing trading is so important that if you don't know how to swing trade, I don't think you're going to make it. So my assumptions is you know how to do that. Otherwise, you don't know how to trade. The second thing is, can I buy a role reversal here? Which is, by the way, this is a swing trade and this is a swing trade. It still gets me to here. Okay, great. So am I at or near that price of 123? Yes. Okay, great. Drop into a 15-minute chart. What am I going to buy? I prefer to buy higher lows and higher highs. So I can do a trap and break. Because this is just a pissy little day trade, and I'm going to be in this for weeks, maybe months, I can wait for this, couldn't I? And now I'm gone, like a bat out of hell. And it took, even though we're on a 15-minute chart, it took me weeks to set this up. What's the real skill of a sniper? To put a bullet into the target or to lay there for 6 weeks watching, recording, analyzing, and then 1 second on the trigger? Which one? I'm telling you, I think the secret is laying there for 6 hours, 6 days, 6 weeks. Okay? I don't think you understand the discipline required for that. I watched a documentary about a spotter that worked with a sniper, that they work in teams. They had all the typical questions like, don't you wish you could be the shooter, and all that kind of stuff. And then they asked, what's the hardest part of your job as a spotter? And kids, cover your ears. He said, wiping the buttocks when my partner has to go number 2. What that means is you don't put the rifle down. You don't stop looking through the scope. If you got to go, you got to go. And the discipline of both these gentlemen is incredible. You're like, you don't even stop. You don't even blink. You don't even take your eyes out of the scope. No. But there's almost no chance you're going to pull the trigger in the next 2 minutes. Doesn't matter. Okay? Patience and discipline. And you can sit on a gold chart for 3 weeks waiting for your entry. But if you don't do that, you'll never do this. Because you're looking around, what about this, and what about that, and what about this, and what about that, what about this, and what about that, what about this, and what about that, and what about this, and what about that, what about but. See, this is why Quant Box is important. You're looking at everything. Okay? You're looking at everything and nothing at all. Do you have a hit list of 10 assets or less? Let me show you something simple. Look, you pay money for this. I can fix you if you pay a little bit of money. If you don't have a little bit of money, you have bigger problems than I can solve. But let's get real. If this is truly a business that you run, you need to invest and you need to have good tools. And if you don't have a logical buy list and a logical sell list, then you are random. You're as predictable as a chicken with its head cut off. You're going to be all over the place, and you're going to make a bloody mess of everything. And if you don't have any logic and intelligence to how you behave in the marketplace, you're just a bloody mess. And you need to buy into that. Like, you don't know what you're interested in buying and selling, and you think you're just randomly going to trade your way into a millionaire? That's ridiculous. Okay? You should run to quantbox.co, pay the $79. Otherwise, you and I have like a massive disconnect. Like, my God, seriously. It's worth millions of dollars of development work. And you don't want to pay $79. Like, it's incredible. It's unfathomable. You need it like now. Why? So you can avoid all the noise in the market and all the ups and all the downs. And you can think about your trades hours, days, weeks in advance. We had a conversation today where one thing was expected to rise, but the chart was falling. And I'm like, that's precisely what you want. That's precisely what you want. An asset we think is going to be valuable in the long run, but for the last 5 days has been falling. Yes! Now go open that chart and set it up. But your random trading and the randomness of the market, in particular in the short run, will never, ever, 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 ever lead to consistent results. 1,000% impossible. Okay? So like chaos theory, right? What does chaos theory mean? That with all this data, and trust me, all the data in the world matters, whether it's New Zealand GDP or the threat of Israel attacking Rafah or a typhoon off the coast of China. These things impact what we do. It's crazy to think that you can know everything all the time and in real time. So that's chaos. There's so many variables that even all the logic becomes chaotic. So what does chaos theory mean? Well, inside the chaos, there are reliable patterns that make sense. And your only hope to survive chaos is to find reliable patterns in the fundamentals and in the technicals. And I have automated both for you. So inside of the chaos of all the, economics that come and go almost every hour, You can take yourself away from the noise and know the direction of Euro Kiwi. Logically. Does it mean it'll happen? No. But there is sound reasoning. So if you grasp a hold of sound reasoning, you can think Euro Kiwi up. Okay. And you can write it down, Euro Kiwi up. And then you open your charts and you find that Euro Kiwi's been falling for days. Good. So you wait like a sniper. And you wait. And it falls for 2 more days. Great. And then it moves sideways for 5 days. Sweet. And then it breaks out to the upside. Go, 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 go. Okay? And TRADARS can suddenly be throwing Euro Kiwi long patterns because it's spotting new channels. It's spotting resistance breaks. It's spotting inverse head and shoulders. It's spotting flag patterns. It's spotting Fibonacci patterns. And if TRADARS is screaming bullish, 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 and meanwhile Quant Box gave you a 5-week heads up of a bull, but right now you got automation telling you the fundamentals, and then you have automation telling you the technicals. Oh my God. Or you could just go back to randomness. The universe is just going to make you successful because you know it in your bones and you feel it. You just know you're going to be a success, but you're not going to invest into tools. You're going to be a plumber with a hammer, or you're going to hand tighten everything because you don't even have a hammer. Think of it this way. Let's say I spent certainly $100,000 going to Harvard to get an economics degree. You can have my economics degree for $79 a month. It'll even make the decisions for you. Bullish. You don't even need to understand it. And it could be wrong, but I'll tell you, and I've given this advice forever. You will be a better trader if you flip a coin. So let's say at the beginning of every quarter, January 1st, so you have January, then April 1st, for example. Right? And then you have all of April, May, June, so July 1st, right? Okay. So let's say July 1st. Canada Day, the greatest day of the year. You flip a loonie. That's a coin, by the way. You flip a toonie. That's also a coin. All right, you flip it, and it says you are now bearish. I am 100% convinced you'd be a better trader if you just had the discipline to set up bearish trades. And if the market's bullish, you'll never get any trades. And if the market is bearish, you're going to have profitable trades. And you will be better off than just being random, bullish and bearish and bullish and bearish and bearish and bullish. You're all over the place, right? So even if you flip a coin, I am convinced you will become a better trader. Because at least you'll be incredibly consistent and incredibly disciplined. But I think we could do better than flipping a coin. So the next level of improvement is have some artificial intelligence analyze macroeconomic data that we gather from government websites and then do comparative analysis between two economies to then give you a logical outcome of this thing might be bullish, this thing might be bearish. Better than flipping a coin. Instead of 50-50, maybe it's 51-49. It could be just but it's logical. Comparing GDP to GDP, jobs to jobs, inflation to inflation, that kind of stuff. Looking at seasonality, looking at technical trends. Like, oh my God, it's way better than flipping a coin. It's hundreds of percent. Imagine looking at 5-year averages, 20-year averages of what it typically does this particular month, doing GDP and jobs and inflation and changes and all these things. It's looking at the slope of the mean of the daily chart. Oh my God, it's so good. But let's say it's just 51% versus flipping a coin, which is 50-50. Then you're still better off. And if making better trades based on logic and it isn't valuable enough to the tune of $79, then I don't know where you're at. Your trading isn't worth enough. Okay? But I would still argue, even if you only got a small trading account, a great education would be learning how macroeconomics affects the drive towards or away from certain currencies, how to set all those up on charts, and then how to translate that into technical analysis, and to only trade verified, reliable patterns. So let me give you an example, and I want you to answer this. It's a rhetorical question, but I still want you to answer it because it's important in the logic that I'm trying to appeal to your psychology here. Okay. Let's say we analyze fundamentally that gold should go up. So now we're only buyers of gold or not buyers of gold. We'll just never sell. Under current market and fundamental, in particular, under these fundamental conditions. And that would be like, for example, inflation being higher than GDP. Under a circumstance like that, you probably, logically thinking, probably want to own some gold to hedge that undesirable inflation. Great. Let's just say that's that. And you're like, Wayne, I understand that. Okay, great. But we open our chart. This does not look bullish to me. It looks sideways to me. So now we're sitting here like, well, we're definitely bullish and we definitely understand inflation is higher than GDP. 3.6, let's say, is our inflation. 1.8 is our GDP. There's double the inflation of productivity. That can't be good. So that some people are going to hedge with that. So, okay, we're interested in buying gold. Okay, great. But only when it turns bullish. Okay, great. So now we're bulls and now we're waiting. Now, then use TRADARS. And TRADARS does technical analysis. That's all it does. It's pretty simple. Is it here? Where's my TRADARS? No, I'll pull it up. Okay. It does technical analysis, only technical analysis. It doesn't guess. It doesn't anticipate. Well, it does actually anticipate because these are all anticipation. These are all technical analysis, right? These are all patterns forming. So you go to commodities and you say, okay, TRADARS, let me put all the Forex back. I'm only interested in gold. So no silver, no WTI, no Brent. Okay, great. Okay, so realize the setup. We're only looking for buys because of our fundamental analysis. So we're a bull. That's it. Nothing's going to change our attitude until the economic conditions of the right have changed. So if productivity skyrockets, that'll lower prices. Well, that lowers inflation, and now you don't need to hedge inflation. So if GDP skyrockets, then you don't need gold. But if GDP is low and inflation is persistent, you're going to need to hedge out the risk. So it makes sense. Okay. So now you go to your intern, your analyst. Okay, this is a junior person on the team. All your analyst does is watch gold charts. Now you're the boss, and you've already made a determination. Based on current market conditions, you want to buy gold. You just don't know when or even what price. You can do some guesses, but you're like, dude, I don't want to watch the gold chart on multiple time frames for the next 5 days or 5 weeks. Like, who has the time for that, for crying out loud? So you use TRADARS to do all the grunt work for you. Because your time's too valuable to sit and stare. You don't want to be a sniper. You're like, Wayne, that story was gross. The sniper laying on his stomach for weeks and he can't even go to the bathroom without the help of his partner because he's not allowed to leave the sniper rifle. You're like, dude, that's gross. And I don't want to do that. Nobody here wants to do that. That's crazy, Wayne. I forget that. I'm like, I agree with you. So, have TRADARS do the grunt work for you. It's not even $100 a month. What is this, like $1 an hour? Like, great, it's less than that. What does it end up being? 10 cents an hour. Gee whiz, like, right? Okay, great. On the 15 minutes, bearish, pass. On the 30 minutes, bearish, pass. Here's another chart. It's a different type of analysis. It doesn't matter. It just looks and sees patterns. So this is a butterfly emerging Gartley. Okay, good. Not interested. Oh, it's trending down. There's a down channel that's forming on gold. Sweet. Great. I guess I'll buy it lower. But not today. Well, what about this one? Here's another channel on a different time frame. Yeah, sweet. I get it. It'll probably fall down to 2230. Great. It'll fall to 2300. Sweet. Not interested. But what if it got to 2300 and then tomorrow started doing bullish trade plans? Well, we'd have to get through 2231, breach this, and then I think across the board, suddenly you'll get bullish. If we breach above 2316, then on the smaller time frames, you'll probably get bullish. Bro, dude, chica. Okay, listen up. This is the opportunity you've been waiting for fundamentally for days. And now a machine that never breaks rules. It has precision. It doesn't stop watching. Even after it sets things up, it keeps watching. But the thing is, it never stops watching. It never guesses. It never makes mistakes. It's either a butterfly emerging Gartley pattern or it's not. It's a downtrend channel or it's not. It's a triangle breakout or it's not. It never gets confused. It never makes mistakes. It never gets sloppy. It never gets tired, and it never takes a break. It's the sniper laying on his belly for 5 weeks taking notes, writing things down. You get to do the fun part. You get to pull the trigger. So I look at this, and I'm a bull. Do I want to buy gold today? Nope. I'm done. I just saved you from wasting a day. You're welcome. And then tomorrow, if this turns bullish, hey, maybe you need to do something like buy gold. Do you understand how radically different this is from an amateur trader? Now, you might be retail, but there's no excuse to trade like you're an amateur. You need to trade like a professional. And I can bring this to you for a little bit. Okay? Absolutely incredible, extraordinary technology. Absolutely incredible technology that you can have inside your Forex trading firm. Okay? Okay? Well, it is. It is easy. Now, I don't know if it'll be profitable for you. I can't make that prediction. Let's say I can't offer that to you. I can't say it. It would be wrong for me to say something like that. But I can get you to act as if you are a professional, polished trader. I can get you to trade as if you do have a macroeconomics degree. You do have a team working for you. You do have resources. Your trading will become logical. People can read your track record, your trading history, and see rationality, not randomness. That I can offer to you. And you can determine if that kind of process and procedures and resources will lead to a better outcome. That you'll have to decide. Because again, I think it would be wrong for me to say, if you just buy this, you'll become a success. No. You might be a jerk. I don't know you. I don't know your mama. I don't know how your mama and your papa raised you. I don't know your work ethic. I don't know your discipline. Okay? Okay? But you can decide if you had those types of resources so that you were equal to $1 billion hedge fund with a staff of 40 or 50 people. And you can trade on par with these guys, okay, then you need to decide whether that'll make a difference. Sorry, I'm looking for seek, and I can't talk and think at the same time. Seek and destroyed. Do I not have seek on here anymore? I haven't traded it in so long. Show all. Maybe we don't. Oh, there it is. I'm looking on. Sweden. Yeah, Richard's in. Yeah. Well, just like, yeah, I'm in it way more than you, bro. Let's just put it that way, right? Well, don't convince what I'm saying with salesmanship or confuse what I'm talking about as salesmanship. And for many of you, you're going to be very skeptical and you're going to say, well, that's what I'm doing. And maybe there's truth to it. But don't confuse passion with salesmanship. Okay? You watch. The Maserati salesman drives home in a Toyota Camry. Okay? I eat the dog food. I am a dog. I'm a dirty dog. I eat the dog food. So if you put in $79 this month, I've put in, let me say it this way, this month alone, on TRADARS alone, not even talking Quant box, not talking about anything else, just on TRADARS alone in the month of May, I have spent thousands and 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 more. Okay? So ultimately, Richard, like, you have to put in that context. And then understand, like, okay, yes, I need your $79. And maybe I'll give up my integrity for the $79. I'll sell my soul for your $79. You might have that opinion. Or you might come from a different point of view where you're like, well, if he's spending that much money and investing that much money into this service, the $79 is irrelevant. It's not going to make a difference to him. So therefore, maybe he's passionate about the value that it actually offers. Maybe he actually believes it's a game changer. Maybe he actually believes it'll make a difference. So I don't know. And there's probably lots of people in between. Somewhere in between all of that. But it is truthful. So no matter how much you put in, you're a $79 client for the next 5 years. I'm in it more than you. So I'm a believer. I'm all in. Right? Yeah, Bert, do you get a toaster? And here's the next thing, and I think some of you have heard this. I have bigger dreams and aspirations for TRADARS. Okay? It's going to get way bigger, way more valuable. It's going to take you to heights, and again, this sounds like salesmanship. I think this is going to take you to heights that you can't even dream. That's a hell of a statement. But it is my intention and my belief. But again, like, if you're like, well, there's not enough value in that for the $79 a month, then honestly, I can't help you. I keep coming to the free webinars. Yeah. Put $500 into a Trader's Way account, and maybe I can help you do that better than you would on your own. That's fine. If that's all you did, you come to the free live streams and you don't have much money, so you're like, well, I need an account. I'll use Trader's Way. I'll put what I can in there. It's going to be a small account, but over the next 2, 3, 4 years, I'll try to learn how to trade properly, follow your advice, Wayne, and maybe I can slowly grow that account into something better. Please do that. I'm not holding you down because you don't have a lot of money. I don't know the situation you were born in. I wasn't born in a great situation. In my family, $5 was a lot of money. And that is not an exaggeration. In my family, when I was a child, $5 was a lot of money, and we usually got the $5 by only paying half of the phone bill or paying half the water bill. And so it was a strategic choice to have an extra $5 for, like, my birthday. Okay? In America, when Halloween comes along, the average household spends like $150 on, like, makeup and pumpkins and candies. Okay? When I was a kid, $5 on my birthday had to come from not paying the water bill. Okay? So I'm not being critical of you if you don't have money or resources. This is why I've been doing live streams for decades. I will help you. I understand. Maybe we don't come from the exact same situation. Oh, but I do get it. Okay? As a child, I would go shopping and just look at things, knowing that I could never buy them, but I enjoyed it. I'm a shopper, but I rarely buy, right? But I like dreaming. So later on, I realized, moving from a child to like things I wanted to buy to then a little bit older or quite a bit older, you're like, wait, there are expensive things and not regular things. What is that all about? Because I wanted to get out of poverty and move towards, all I knew was rich. I didn't know there was such a thing as wealthy. I wondered, having grown up in a poor world, I wondered, like, what kind of people shop at these other stores? Who has the money for this stuff? And what do they do? How are they different from me? Are they, did God differentiate them from me? Or can I become rich? Who are these people? Okay. And I started to do more of that, paying attention. And I did really strange things where then later on in life, I said, well, what do rich people do? Because I started looking at them and I'm like, just literally people walking around the store, I'd look at it. I'd watch people. I'm like, what are these guys? How do they dress? How do they act? I noticed they dress differently than me. Oh, okay. So maybe dressing a certain way. And then, then I looked at other behaviors and, so you get a book, a magazine like Robb Report, which I still get today. I'm like, oh, rich people like watches, rich people like wine, rich people like whiskey, rich people like cars, rich people like yachts, rich people like airplanes. Like, I know it's all very superficial, but I didn't know. I didn't know. So then I'm like, well, I want to learn all these things. Maybe these things help you. Right? You see? And you start slowly seeing sort of a difference. And then you start doing things like in 1991, I realized, because I read an article. Okay. I read an article, and I believe it was the Robb Report. It might have been Wine. Oh, you know what? It was Wine Spectator magazine. That's right. So I didn't know anything about wine, but I knew rich people bought wine. Because where I grew up, nobody drank wine ever. Nobody. Okay. I don't remember my mom having Chardonnay laying around. But I knew my mom was cool though. She taught me how to survive, which I call, she taught me how to live in poverty, but to live good in poverty. And one of the things she did to teach me to survive, like, look, if you need a birthday, if you have a child, if you have an 8-year-old child and it's his birthday, you can steal a little money from the phone company and then take the kid out to an arcade and have, back then you can get lunch and have money left over to go to the arcade. Like literally $5 was a reasonable amount of money. And she taught me how to survival. Like they're not going to cut the phone off over $5, so you pay some of the phone bill, right? But the other thing she taught me is even though you don't have a lot of money, you can still be cool, right? And so every once in a while she'd throw a garden party and her girlfriends would come over and they'd wear hats and white gloves and have champagne and mimosa, cheap ass champagne, but whatever. And you'd have a good time. They'd have strawberries and blueberries from the garden. And I'm like, dude, super cool. Like what a kick-ass mom, right? So now going to the future, I'm like, but I'm trying to become rich. I'm trying to become wealthy. I grew up poor. I grew up with nothing. I got some love and I got some class and I got some, survival skills from a really cool mom, right? And a dad who was a dreamer. He just happened to live in a different country. So anyway, so I got all of that. And then here later on, I'm like, okay, I'm learning how to dream and I'm learning how to act, but I still don't have anything, right? And so I got this Wine Spectre magazine and I read through it and I realized there was a top 10 list and everything. And I'm like, this is what rich people care about. So I'm like, so I spent 6 months teaching myself about wine so that I could talk to a wealthy person about wine. And I started going to a warehouse. And I actually had a cool business idea. I won't get into that. But I went into like a warehouse where they sold wine out of boxes and stuff. And couldn't find anything that I wanted to own. I didn't want to drink this wine. So I decided I want to collect wine simply because that's what rich people do. This is an extraordinary story that's taken a long time. But I'm telling you, I grew up with nothing. And I had to get to a different world. So I understand you, but I also got myself out. So if you want a story of how did I get out of poverty, well, these are the things that I did. So this is 1991, and I taught myself about wine, and I wanted to own wine. I wanted to collect wine, and so I saved $100, which is a lot of money when you don't have money. And I ended up driving all the way to Napa. I don't think I'd ever even been to Napa before. I went to the Beringer estate where they grow all their wines in Napa. And I went into the fancy pants part of the private building where there's a private tasting room. And I went in there and I sampled 2 bottles of wine. I didn't even know what wine tasted like. That was never sold in stores. You can only get it from the estate. So estate bottled Beringer. Cool. Now they had older wines, but I couldn't afford older wines. So they had the new release. The very, very young release. Okay. And so I bought, so anyways, I tasted the red. And I tasted the white. I'm in this fancy room with this fancy pants guy serving me, and I'm just a kid. And I say, well, I'll take them. And he's like, well, how many bottles? How many cases? I'm like, 1 of each. And he's like, so 1 case of the white and 1 case of the red? I'm like, no, 1 bottle of white, 1 bottle of red. And the guy almost had a heart attack that he wasted all this time with me. Okay. I still have the wine in my cellar. And they're extremely valuable. And I got myself out of poverty. Okay? So I understand. I know where I came from. And I haven't looked back. And I'm willing to go to extraordinary lengths to move up the value ladder. And when I look at like what's being offered to you as a Forex trader, and having remembered all the blood, sweat, and tears for really decades that I went through to become a trader who I am now, I'm not the world's greatest trader, but I care. I'm passionate. And I'll tell you, you need Quant box and TRADARS. It's your bottle of white and it's your bottle of red. These are something that you need to acquire to get the success that you're trying to get to, whatever that is. It's hard to break through. And these tools will undoubtedly bring consistency and logic to your trading. Whether from that you can make good decisions or bad decisions, I don't know. I could have bought any bottles of wine. Those 2 bottles of wine, remember how I started with the Wine Spectre magazine? The white became the wine of the year and was put on the cover of the magazine like a year later. It became the most demanded white wine in the world, and I owned it, and I bought it a year before. The red, right, the 1991 Beringer Cabernet Sauvignon Estate Reserve is now considered the first cult cab of Napa County. It's in my cellar, about 50 feet away. So you still have to make good decisions. I don't know how I did it. It was so random. I could have gone to all kinds of... I could have gone to Bellevue. I could have gone to, Peugeot. And I mean, I couldn't get into Opus, and I couldn't afford it. It was random. So either I made an extraordinarily lucky choice, an extraordinarily intelligent choice, or it was God making the choice. But it happened because I tried. Do you understand? It took me 6 months to prepare to make that purchase, saving money, but also researching and teaching myself and educating myself. Going to wine stores, like I said, it was over by the airport. It was a warehouse, and they had bottles of wine in the boxes, and they had the little notes, and I'd just read the notes. And I'd talk to the guy at the cashier, and he'd tell me basic things. He's like, dude, you don't know jack about wine. And I'm like, I know, but I'm learning. And by the time I was ready, I could not have made a better choice. But it was the preparation, wasn't it? A lot of luck, but nobody tried harder. Okay? Imagine you have a hardcore foundation. You have coaching from me, so I'm on your team. I work for you. You have a quantitative analyst, so you have a Harvard economist and strategist. You have a quantitative analyst looking at all the economic data coming out of all the major governments around the world. And you have a technical analyst watching 7,500 charts in real time, 7 days a week, 24 hours a day, and alerts you to only 15 of the most reliable and quantitatively proven patterns. And from that, you make your decisions. The world is yours. The future is yours. Your destiny is yours. I want to be by your side when you become successful, and I want to see you smile. And it'll just be a little wink, a little nudge. I'll know. Have a great day.